Welcome back to Rekt Radio, the only show that looks at a market full of leveraged bets and doesn't see a house of cards, but a rocket ship getting its final fueling. I'm Sunny, and folks, the countdown to liftoff has begun.
And I'm Cole. I'm just here to remind you that when a rocket has that much explosive fuel packed into it, the difference between a liftoff and a catastrophic failure is just one tiny little spark. Let's try to figure out which one this is before we're all vaporized.
Never, Cole. You can't deny the sheer power building up under the hood of the market right now. And the main engine, the one that's absolutely screaming with power, is Ethereum. We are on the verge of something truly spectacular. The data is pointing to one of the largest short squeezes in history.
Oh, fantastic. We're celebrating a short squeeze now. For everyone listening, that's not a sign of healthy, organic growth. That's a violent market dislocation caused by a legion of degenerate gamblers who bet the wrong way, getting forcibly liquidated from their positions. It's not an investment strategy. It's a car crash in slow motion. What's the bull case this time? That the explosion will be extra big?
The bull case is that the bears have gotten far too greedy, and they're about to pay the price. We're seeing a record amount of open interest in Ether derivatives, meaning the market is packed with leveraged positions. But here's the kicker, the funding rate is showing that short sellers are paying a fortune just to hold their bearish bets. They are bleeding capital while betting against a titan. It's a powder keg, and the bulls are holding the match. Analysts are already eyeing a quick trip to $4,000 once this thing blows.
A quick trip to $4,000 fueled by liquidations. So the price goes up not because of new buyers with fresh conviction, but because the existing gamblers on the other side of the trade ran out of money. Wait, let me jump in here. This is a fundamentally unstable setup. You're celebrating the financial equivalent of a demolition derby. For every short that gets squeezed, there's a leveraged long who thinks they're a genius ready to be wiped out on the next wave down. This isn't a sign of strength, it's a sign of peak mania and instability. It's a house of cards getting taller, not stronger.
It's the market efficiently punishing pessimism. But it's not just the derivatives market. Look at the ETH to BTC ratio. It's been breaking out of a long-term downtrend. This isn't just leverage, it's a fundamental rotation. The market is saying that Ether has more upside, more catalysts, more raw potential than even Bitcoin right now. The king is being challenged by the prince, and the prince is winning.
The prince is throwing a party on borrowed money. The ETH-BTC ratio is just one group of speculators shifting their bets from one volatile asset to another. It's a narrative trade. It doesn't prove any fundamental strength. It just means the hot money is flowing from one side of the casino to the other. When this leverage bomb goes off, whether it squeezes up or cascades down, it's going to leave a crater. Cheering for a short squeeze is like cheering for a hurricane because you hope it blows down your neighbor and not yours.
I see it as a cleansing fire that makes way for new growth. And speaking of cleansing the ecosystem, we're seeing major players step up to bring more legitimacy to the space. Look at Tether. They've been actively working with Brazilian authorities to crack down on a major money laundering ring. They helped freeze the illicit funds.
How noble of them. The world's largest, most controversial offshore stablecoin issuer is now playing policeman. I'm sure this is purely altruistic and has nothing to do with the crushing regulatory pressure they face globally.
Of course it's a good thing. This is how we build trust. When a giant like Tether demonstrates it can be a responsible actor and collaborate with law enforcement to stop crime, it sends a powerful message. It shows that crypto isn't the Wild West anymore. It's a mature financial ecosystem that can police its own backyard. This is what paves the way for regulators to give their blessing, for institutions to feel safe, and for the next billion users to come aboard. They are building the bedrock of trust.
The bedrock of what? Centralization? Let's be very clear about what you're celebrating. You're celebrating the fact that a private company can, at the request of a government, freeze your funds without trial or due process. Does that sound familiar? It sounds exactly like the banking system we were supposedly trying to escape. The entire promise of this technology was censorship resistance. It was be your own bank. Now, the biggest bank in our world is acting as an enforcement arm for the state.
But Cole, you're missing the point. They're not freezing the funds of innocent people, they're stopping criminals who used a criminal enterprise to launder money. You can't have a legitimate financial system that doubles as a safe haven for every bad actor on the planet. To grow up, the industry has to be willing to take out the trash. This is a sign of maturity, not a betrayal of principles.
It's a complete and total betrayal of the core principle. It proves that your Tether isn't really your money. It's a liability of a company that can and will seize it if they are told to. Today, it's a money launderer in Brazil, which is easy to agree with. What about tomorrow? What happens when it's a political protester, a journalist, or someone from a country that falls out of favor with world powers? The infrastructure for control is being built and cheered on by people like you, all in the name of legitimacy. You're so desperate for mainstream approval that you're willing to sacrifice the very freedom that made this technology revolutionary in the first place.
It's not about sacrifice, it's about evolution. But I know what you really care about. All of this is just noise to you if the big dog isn't happy. So let's pull up the chart. Let's look at the real signal, the one that cuts through all the debate. Let's see what the technicals on TradingView are saying about Bitcoin today.
Please, after a journey through leverage mania and philosophical compromises, I need to see something grounded in numbers. Show me the chart. Let's see what story the magic lines are telling us.
They're telling a story of deep, unshakable conviction, Cole. The overall summary on the one-day chart is a solid buy. But that's not even the best part. When you look at the moving averages, the indicators that track the powerful underlying trend where the big money operates, it's a strong buy. That is the heavy, gravitational pull of the market. It's the institutional capital, the long-term belief, and it is firmly, unequivocally bullish.
You and your love affair with lagging indicators. You're trying to drive by staring into the rearview mirror. The moving averages just tell you that the ride up to this point was nice. Let's look at what's happening on the dashboard right now. The oscillators, the tools that measure the real-time momentum, the buying and selling pressure happening this very second, a flat, boring, resounding neutral.
Exactly, and that is the most bullish setup possible. You consistently fail to grasp this concept. When the long-term, powerful trend is a confirmed strong buy and the short-term momentum goes neutral, it is the textbook definition of a healthy consolidation. It means the market has found a new higher floor. It's pausing to catch its breath, to absorb the new price level, and to build up energy on a launchpad of confirmed strength. It's a coiled spring getting ready for its next massive leap upwards.
It's a massive divergence and it's screaming danger. It shows the old trend has completely run out of fuel. That strong buy is just a memory of the climb. The engine has stalled. That neutral signal isn't a healthy pause. It's a sign of complete and utter exhaustion from the buyers. They have no more power to push prices higher. You're looking at a rocket that has reached its apex and is hanging in the air for one brief, terrifying moment before the laws of gravity take over. This isn't a launch pad, Sonny. This is the peak.
That's all for this episode of Rekt Radio. I see a market punishing bears, cleaning its own house, and building a foundation of immense strength for the next rally. Stay bullish and get ready for the squeeze.
And I see a market full of dangerous leverage, compromising its core values for a pat on the head from the authorities and showing every sign of exhaustion. Don't become fuel for someone else's rocket. You've been listening to Rekt Radio.